The easiest way to make a huge profit is by taking a big risk. In the long run, that does not usually work out well. But what if there was a way to make a big profit by taking medium risk? This is where pyramiding comes into play. Pyramiding is one of those concepts that isn't talked about a lot, but it has helped me significantly in my trading journey. So in this video, I'll teach you everything I know about pyramiding. We'll go over the basic things like what is pyramiding, and then I'll practically show you with my live trades how I actually use this concept in live trading. What's up guys, I'm Vikrant and welcome back to another video. This channel is mainly about stock trading and my experience about it. If you haven't already subscribed to this channel, do so by clicking on the subscribe button and don't forget to press on that bell icon. Also, don't forget to follow me on Instagram. If you have any questions, then I'll be happy to answer them. Let's begin. So for the next 5 to 10 minutes, I'll go over the theoretical part and then I'll go over the practical part as to how you can actually use pyramiding in your trading journey. So pyramiding simply means adding more quantity in your trade as the trade moves in your direction. Now this is the opposite of dollar cost averaging. Think about this. In 2017, I bought a stock at around 300 or 350 rupees. So this was my initial entry price. But something happened and the stock crashed within the next few days, like it usually does. And then the stock went down to 250s level. So I was down about 100 rupees per share. So let's say that I had bought in 100 shares at 350 level. So instead of closing my position at this point, what I did was I added in more quantity so that my average price went from 350 to maybe around 300 levels. So even if the stock went up a little bit at 300 level, I could sell my position and exit with a small loss. So that was my plan. Within a few months, the stock was at 150 level. So what I did was I bought in more shares at 150 or 160 level. So this is where I bought in more shares. So my average price went down even further. But things did not go well. The stock went below the price of 100 rupees and the stock just kept going down until it became a penny stock. Now, this is a very common story with most people. Most people get trapped in stocks like, Reliance Communications or RCAP or Suzlon or Yes Bank or any one of these, hundreds of stocks. So even though my initial entry price was around 350, as the stock kept going down, I added in more shares. I bought in more shares to lower down my average cost so that even if the stock went up a little bit, I could exit at break even. But the stock kept on but the stock kept going down and down until I ran out of money. And this is usually what happens with most people. Pyramiding, on the other hand, is the opposite of averaging. Instead of buying more shares as the stock goes down, what you do is you buy more shares as the stock goes in your favor. Pyramiding is a way of increasing your profits without increasing your risk by much. So these are the advantages and disadvantages of pyramiding. The first one is that pyramiding keeps your losses small. So I'll explain as to how that actually works in live market. The second advantage is that it increases your profits without increasing the risk, which is the whole point of pyramiding. But it also has a couple of disadvantages. The first one is it's a bit difficult to execute in real trading. So if you're a trader, you want to try pyramiding for the first time, chances are you'll screw something up and instead of making a profit, you will turn that into a loss making trade. So with some experience, pyramiding does get simpler. Pyramiding increases your brokerage and other charges. So pyramiding depends on the scale in scale out method, which just increases your brokerage charges by a lot. But it also increases your profits and decreases your risk. So that way you're compensated for the increased brokerage charge. This is the trade that I had posted on Reddit about my pyramiding thing. So take a moment to analyze this thing. I have written everything you need to know about this. You can just pause the video and check how I took this trade. Now let's go on to live examples because this is almost the perfect day to record this video. These were my trades that I had taken today. So I taken 4 trades today and I made about 10,000 as today's profit. So let me just refresh the screen for all the doubters. So the profit today was around 10,000. And the reason why today is a great day to record this video is because number one, I've taken 4 trades, so you will have more examples of how pyramiding works in live market. And the second reason is I also have a trade where I've made a loss. So trading is not all about making a profit. Like I make a loss quite often. but my losses are smaller than my profits, which is the whole point of trading. So let's go over my order book and I'll show you how I'd actually done, how I'd actually used pyramiding. And these were the trades that I had taken today. The number of trades is definitely a lot, so the brokerage will be a bit on the higher side, but a lot of orders are cancelled, so that's not a big issue. So at around 9:24, I shorted a stock called Maruti. So let me just show it to you. And yeah, this was a simple trade. The stock was trading in a range. It broke out with high volume. It broke the support. So my first entry price was around 6,767. So which is around this point. So this is where I shorted about 50 shares. And somewhere around here would have been my stop loss. So this was my risk. So this was my risk and this was my target because this seemed like a decent target, and this was the second target, but we'll talk about that later. So here's how pyramiding actually works. So I shorted 50 shares at 67.67, and the next candle was a green candle, but it was a weak candle. So here's the 1 minute chart to drill down the time frame. So I shorted it around at this price, and then the stock took a support, went back up. So what happened was at this point I was actually in a small loss, but my stop loss was way over there, so that wouldn't have mattered much. So you can see that at around 9:30 I added 25 more shares to my existing position. So this is the candle that was formed at 9:30. So the first lesson was that I had shorted it around this point. For the initial few moments, the stock went against me, and then it started going in my favor. So once this was broken, I added in 25 more shares at this point. I did not add more shares here. I added more shares at this point, and then I added in 25 more shares at 67.56. So 67.56 is this point. So once this support region was broken, I added in another 25 shares. And the reason is because number one, this sort of up move failed, this support was broken, and the volume on the 5 minute chart was also good. So, so due to all these confirmations, my conviction in this trade increased and I added in more shares. So my initial position went from 50 shares to about 100 shares. So here's a screenshot of my trade when it was going on. The average price was 67.63. 100 shares were shorted at that moment. So my initial entry was 67.67. So you can see that my initial entry was at 67.67, while after pyramiding my entry was at around 67.63. So this is not much big of a difference, and I added more shares as my conviction grew without messing up my average cost. The second trade I took was HDFC Bank, which turned out to be a loss-making trade. So I entered at around 14.18. So my entry was around 14.18, and this is where I entered the stock. So this is where I entered the stock at 14.18. So I went in with 200 shares, and you can see that the second I bought this stock, it started going down. The thing you need to observe is that after I bought this stock and the stock was in a loss, I did not add in more quantity. I did not add in more quantity. I did not buy HDFC Bank. Rather, I sold it in two lots so that my loss was minimum. So you can see that my stop loss was around 15 rupees. So 15 rupees into 200 shares. So my loss would have been around 3,000 rupees. So that would have been my loss. But if we go back to my positions, my loss was only around 1800, which is almost half of what my loss would have been. And the reason is because when the trade started going against me, I did not add in more quantity. Rather, I exited my position at every fall. And this is one of the main points I like to focus on. So whenever the stock is going in your favor, let's say that the stock is going up, you buy in some shares here, and then the stock starts to go against you, but when it finally does go in your favor, here at this point you buy in more shares. So this is the whole concept of pyramiding. If the stock goes in your favor, you buy in more shares. If the stock goes against you, you avoid buying more shares. And this is exactly what I did, because a lot of people will teach you something that does not actually work in live market, or worse, they don't actually practice it in their own trading. So, but this is something I practice in pretty much all of my trades. The third trade was Reliance. So you can see that I had shorted about 250 shares of Reliance, and let me just put up the chart. So 1924, this is where I shorted 250 shares of Reliance, which is equal to one lot. The logic was pretty simple. This was a resistance. This was like a trend line. It was broken. The volume was also on the higher end. My target was initially at this point, somewhere around this area. Uh, but you can see that this did not happen and I had to exit my position. We'll get to that. We'll get to that later on. So at 1924, I shorted Reliance, and for the next 25 minutes, you can see that Reliance started going against me. Okay, so I shorted at this point. Reliance was going against me, and I did nothing. But the moment this candle was formed, all the price action of the previous candles was taken out, and there is clearly strong rejection in these green candles. So once this candle was formed, what I did was at 1922, I bought in more shares, about 150 more shares. So at 1922, at this point, I bought in 150 more shares, and at 1921.50, I bought in another 150 shares. I went from having 250 shares all the way up to 550 shares. So this way, my position size was more than doubled. But you can see that once this was broken, my conviction in this trade was much higher, and that is why I added in more shares. Here is the fun part. You can see that my stop loss was around 12 points, and initially I had about 250 shares. So let's just do the math. 12 into 250, which is equal to 3000. So that was my risk on this trade. But once this level was broken, once I added in more shares, once I had a position size of 550, my stop loss went from this to about this or this. So it went from 12 rupees all the way up to 5 rupees. And let's do the math again. So let's take 5.3 into 550 shares. 2,950. That was my risk once this happened. So my risk went from 3,000 in the beginning on just 250 shares, all the way to 3,000, actually less than that, on 550 shares. So I had more than double shares, but my risk was pretty much the same. And again, I'll show you a screenshot of my trade. Yeah, so here I had 550 shares, and my average price was 22.8. So back to the chart, we went from 1924 to 1922.8, which is not much of a difference. So even though I did pyramiding, my average cost did not change much. And when the stock was going against me, I did nothing. I just held on to the stock. And even if my stop loss would have been hit, my loss would have been just around 3000. What are the lessons you can learn from this trade? So these are the 5 lessons that you can learn from this trade. So the first one is going with a small quantity. So initially I just went in with 250 shares. So that was my initial entry. So initially my entry was just 250 shares. So first point, we can check that because I have followed this. Sit still when you're in a loss. So you can see that initially I was in a loss. The stock was going against me for some time. I did nothing. I just watched the screen and I was ready to take a loss. So I did not add in more positions. I did not average down, which is something that will actually kill your trading account. So you can check that. Add in more quantity as the trade goes in your favor. So once the trade started going in my favor, I added in around 150 plus 150, around 300 more shares. So check. The fourth one is don't mess up your average entry price. Now this is a big one and this is a heavy mistake. So my average price went from 1924 all the way to 1922.8, which is not much of a difference. So you can check this point as well. And the fifth one is trail logically. This was my initial stop loss, and you can see that this stop loss was around 0.5% of the price. And once this level was broken, I trailed my stop loss to around this point. So my risk was same. The stop loss was still logical because it was on top of this candle. Now, why did I not, keep this as the original stop loss? Because this was just around 0.3%, which is a little bit tight for me. I'm a little conservative trader, so I like to keep a wider stop loss in the beginning, and I like to trail my stop loss. So if I'd kept this stop loss, then it could have been hit at this candle. So my stop loss could have been hit unnecessarily, and that is why I kept a little wider stop loss. So all 5 points have been checked, and this is like the perfect example of pyramiding. I added in more quantity as I was winning without messing up my average cost. So these were the first three trades, and then I tried to take a couple of more trades, but I canceled those orders for some reason. And this was my final trade at around 3 p.m. So let me just go over that trade. So this was my final trade for the day, and the logic behind this trade is very simple. There was an ascending triangle, a breakout with high volume, and the stock was already up. The market was bullish. Were the reasons why I decided to go long on the stock. So initially, I went in with 150 shares at 3196.8. So this was my first entry. So at 3196.8, I went in with 150 shares. And as this candle closed with high volume and I was sure about this breakout, I added in 100 more shares at 3198.85. Let's round it off to 3199. You can see that my average cost was 3197.6. So 3197.6. So again, not much of a difference, but still, as the trade went in my favor, I added in more quantity. If the stock would have went against me, I would have done nothing and I would have lost money on only 150 shares rather than 250 shares. So once I bought this, I trailed my stop loss to this point, and once I did that, my risk was again the same, but my profits would have been much more, and my conviction on this trade was high. So the whole point of this video was showing you how I practically trailed my stop loss and how I actually, use the concept of pyramiding in my day-to-day trading. So, in all the four trades, I had done some sort of pyramiding, and in the one trade that I lost money on, HDFC Bank, I did not do pyramiding because it went against my expectations. So these were the four trades. So my loss was minimum, my profits were bigger than my loss. So on the last two trades, I only took a trade based on my profit. So if I made a profit of 7,000, I took a risk of 2,000 to make another 3,000, and which is exactly what happened. So here's a little summary of the concepts that I've talked about. The first one is pyramiding does not work all the time, but it does work most of the time if you do it right. So um, sometimes the stock gives a breakout and the breakout is really strong and you don't have time to add in more quantity. That is where I would avoid pyramiding, but it does work most of the time. The second concept is that the base has to be big. Now if you look at a pyramid, the way a pyramid is formed is it has a wide base. So the base is actually wide, and then the next blocks are smaller. So even in my scenario, you can see that first I added in 50 shares, then 25 and 25. So my initial entry was big. In case of Reliance, first I added in 250 shares, then 150 and 150. So my initial quantity was much bigger than my second quantity, and there's a logical reason as to why I do it. And the logical reason behind why I do it is because your first entry will always be the best one. So 1924 was my first entry in Reliance, gone in with 50 shares, and if I had bought in another 150 shares over here, my average cost would have been much more different and it would have been something like this. So that is not a good trade because it will mess up your average cost, and once your average cost is messed up, pyramiding will not make any sense. So you'll have to take care about your average cost. That's why the base of your pyramid has to be big. The third one is try to add in more quantity in the beginning instead of adding it after a significant move. So this is the first trade I'd taken, and you can see that I'd added in initial quantity at this point. Then there was a rejection candle. I did not do anything because I was in loss. Then at this candle, I had added in most of my quantity and trailed my stop loss once this support region was broken. And I could have added in more quantity at this point, and at this point, but I did not. And the reason is because once I add in more quantity at this one, my average cost would have gone down from here to here. If I added in more quantity at this point, it would have gone down even further. So my average cost is going down, but my stop loss would have been the same. Fourth one is trail logically. Don't trail your stop loss just for the sake of it. My stop loss went from this to high of this candle to this point. So my entry was around here. So my risk was actually zero. Trailing your stop loss is an art, and it is a topic for another video. Maybe I'll make a video on live trading on how I trail my stop loss in live markets. The fifth one is don't over leverage and always use a stop loss. If your capacity is 1,000 shares, most people think that pyramiding is, go in with 1,000 shares in the beginning, then go in with another 1,000 shares and another 500 shares. So it is 1,500 shares more than what you can actually handle. Pyramiding simply means that if your capacity is 1,000 shares, go in with 500 in the beginning, then 300 after confirmation, and then another 200 at the end. So if in the beginning your trade would have gone wrong, you would have lost money on the 500 shares only instead of 1,000 shares, and your loss would have been half. And the final point is don't try to mess up your average entry price, try to keep it in control. That is one of the reasons why I use pyramiding in the beginning, and I set with a wider base, because that will help me keep my average price in control. Because once your average entry price is wrong, you'll end up making more and more mistakes. That way your risk reward ratio will not be as great, trailing will be a bit more difficult, and your risk would not have decreased much. So entry price is something you need to focus on. So these are the 6 things you need to know about pyramiding. So let's say that this is the stock, and tomorrow morning it gives a breakout. There's a retest, it goes up, and then it closes somewhere around this point. And if your capacity is, let's say, 1,000 shares, so once you go in with 500 shares at this point, your stop loss would have your stop loss could be either here or at this point. So let's assume that you keep your stop loss at this point, and your target is 1:2 risk reward ratio. So once you go in with 500 shares at this point, the stock initially goes into your favor, but then it sort of reverses, takes a retest at the previous resistance, and then it starts going up. So once this level is broken, you can add in more quantity over here, and you can also add in more quantity once the stock starts going up at this point, so that your average cost would have gone up from here to maybe here, and then you can trail your stop loss all the way up to maybe this point, so that your risk would have been the same. And once the stock starts going in your favor, you can exit the position accordingly. So let's say this was initially your stop loss, the stock went up, but then it started coming down, and then it hit your stop loss. So that way you would have lost money only on 500 shares instead of 1,000 shares. So your risk would have been half, while your profit will be double. And this is the whole concept of pyramiding. This is a hypothetical example, but this is very practical advice, and I've shown you how I use pyramiding on my positions. So this was it, guys. Hope you enjoyed this video. And I know this video was a bit technical. Maybe I couldn't explain it that well. But hopefully you have learned something. And don't just go in and over leverage your position in the name of pyramiding. Think logically. Try on a small capital. If your capital is 100,000, try it with 25,000 or 30,000. And once you are good with pyramiding on a small capital, then you can try it on a bigger capital, because pyramiding is a little difficult, because in live market there are a lot of things that go on. And if you do pyramiding in the wrong way, instead of reducing your risk, you'll actually increase your risk, which will ruin your capital. So think hard
That's what she said. That's what she said. That's what she said.
before you use pyramiding. And if you like this video, give it a thumbs up. If you learn something, then subscribe to my channel. I try to make more live trading videos, so that it will be helpful. And I'll also try to improve the quality of the further videos and explain more and more practical concepts, because this is something that's not being taught in a lot of YouTube videos. Even if it is being taught, most people just show you theoretical advice, like like this is the stock, so buy more quantity here, 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 and here. But the thing is, this kind of movement is not that common. Like stocks generally move in a haphazard way. Hopefully you have learned something. If you like this video, give it a thumbs up, subscribe to my channel for more videos, and thanks for watching. See you next time. Till that time, take care. Bye bye.